Okay, good morning, everybody. It is Monday, March 14th, 2022, and we're going to get started here with our pre-market analysis like we do every morning. Um, One thing that I need to say is we are smack dab in the middle of something, price action that we've been watching for, I don't know, what is it, 2 or 3 weeks now. So I don't think there's really going to be much to add to the picture here this morning. But let's go ahead and we'll start from the top end and we'll take a look. We'll come all the way up to the annual chart. And just the only thing I really look at from this bird's eye perspective is where we are in relation to the previous year on this chart here. And we're holding just about around 50% of last year's price action. So that's really the only thing I'm looking at here on the annual chart. And there really has been nothing to say this year on this chart. So let's go down. Let's see the quarterly as well. Just like the annual chart, really has not changed very much. So there's really not anything to add to the picture. We did our higher time frame review last Monday as well, and that picture has not changed very much. Like I said, we've been chopping up and down inside of the same range pretty much for 2 months now, but a little bit more closely, we've been trading in this tight zone here for probably 2 or 3 weeks. So looking at this monthly chart, really don't have much else to say about this either. Not much has changed since last Monday. What we do, let me just see here, 50% of last month is that 43.75. So you can see we're just a few points above there right now. I believe the current price is somewhere around, about 30-40 points above it at the moment. So that's really all I have here on the higher time frames. I know Monday is supposed to be a review of the bird's eye view here, but because the market has not really moved appreciably outside of the zone that it's been in for basically a month, there's really not much else to add. Let's see, does the weekly give us any new kind of information? Let's go ahead and zoom in here. There's that major wick we've been watching now for what, 1, 2, 3 weeks now. And still have not come down to test that low at 41.0175. Remember that I said last week when we were looking at this chart that typically when you have that type of major wick to the downside on the weekly chart, historically, price does actually turn and continue going in a bullish direction. There have been some instances, kind of like right here, back at, it looks like to be kind of the end, last few months there of 2021, we did get a major wick bar, just like here. We got it back over here in September of last year, but then the price still broke down below, but was more so like a little peak below to bounce and continue going in that direction. So that's the only thing that I can see going on right now is every other time we have the bar, it either holds that low and and eventually finds its way back north, or it comes back and tests that low in some respect. Sometimes testing it to the tick, sometimes coming just in front, sometimes breaking that low at 0175 and playing around and then eventually going. So that's what we're seeing. The same exact thing I said when we looked at last week's chart, right? So everything is basically the same up here. If you watch last Monday's recording, you would hear all the same stuff on the higher time frames. Let's get down into our daily chart now and take a look. So Friday, you could see we attempted to kind of break out and then ended up closing down at the lows basically of the day before Friday of Thursday. So there was an attempt to rip higher here. And if anyone was in our pre-market last week, remember what I said, we didn't get a nice bullish divergence down off these lows here. So if you look back and you look at all the major turns on the S&P 500, I'd say 9 times out of 10, there's a bearish or a bullish divergence when there's a major turn. There are some outliers, but like I said, 9 times out of 10, when the market makes a major turn, there's typically a pretty clear bullish or bearish divergence lining up with that turn. Here's one case where there's still a bullish divergence off this low. It's just not the kind that I'm in love with. But as you can see, pretty much every other turn has that. So down over here off the low that we're at right now, I don't see a bullish divergence. And there was, when we were down here, there's also a very bearish looking bar there. But that's neither here nor there. But we attempted to come up. We actually broke the top wick of that very bearish looking bar a few days back. Tried to push higher, and then we came up to, there's one level that I emphasized, and that was this 43.41. So for anyone who's been in our pre-markets last week, 43.41 has been a major swing low that we've been watching. And then if you remember back to Friday, we came up and came, I think, 4.5 points in front of that level, and that was it. We failed and came all the way back down. So I still, like I said when we were down here, I expect we'll come back to test the lows that we made here at 41.3875. And again, in some regard, either come down and bounce just in front of it, and when it bounces just in front, we get some type of bullish daily divergence, or it comes down and makes a double bottom, or it comes down and peaks below. Those are those three scenarios that are possible when you have a major low. Market will come down and test it, or it'll come down and bounce just in front of it, or break it just a little bit and then bounce. So there's that scenario that could occur to test that low, or we could just end up continuing to sell off. So we'll have to see what happens here coming into this week. What I can tell you right now is Friday's daily bar there looks very, very bearish. Closing, at the lows of the bar, more than 50% of the candle is a wick to the upside. And again, in the context of a very heavy bearish market right now. So what is this telling me? I would expect, especially if we can break the low of Friday's candle here at 41.98, if we can get through that low, it's telling me I would expect a test of that 41.38 low. So let's go ahead and get into the intraday time frames now and see what levels we're dealing with. Now, if I'm assuming most of you who are in the room right now, I think there's 5 of you who were here last week. So I said this, I think some of you just started coming in. There are all the levels we've been dealing with since last Monday's pre-market. In fact, I think Mondays and Thursdays is when we meet in this public room here. So last Thursday, last Monday, and then the Thursday before that and the Monday before that, we were still talking about all basically the same levels. So you're going to have to kind of just understand that nothing has really changed. And I've got a whole bunch of trend lines on here that I was just kind of playing around with. So I don't want to confuse you too much with those. But it did look like we were starting to get maybe some type of channel right over in here. And then we have the larger downward sloping channel going on. But what I want to show you, I'm going to get rid of these lines, is we kind of have a little bit of a wedge going on, right? We have kind of these lower highs, and then off of this most recent low here, we're kind of starting to wedge back up in like this, right? So we've got kind of a wedge pattern going on. Again, constricting, tightening range. So at some point, this is going to have to break one way or the other. Like I said, we could come down, test those lows, and then maybe break lower to come down, or try to come up and break through this wedge we're looking at. So the levels we're dealing with, like I said, are all the levels that we've been talking about for probably a week or 2 or maybe even 3 weeks now. So it's just at this point, remember in the past, I said we're continuing to deal with these levels. At this point, we're now so constricted down that it's going to be super messy in here. So as messy as it was last week and the week before, it's now even more messy now that we're constricted even more. If you can catch me on that one. So this morning, let's see what we can grab from the charts. I don't think there's going to be much to see here this morning because of the situation. But let's take a look here. So on the 4-hour chart, from this kind of zoomed out perspective, compared to the intraday time frames down on the 60, 30, and 10-minute chart, from this 4-hour perspective here, a really clear bearish signal off of Friday's high, and a decent bullish signal off of the lows that we made from the Friday low and from the overnight session here from the Sunday Globex. So we've got kind of a tight zone. Breaking through 98 below us opens up a test all the way back to the lows of last week, which would be that test of 41.38. So just keep in mind, if 98 breaks, there are going to be some minor levels between 98 and 38, but I think that's a pretty straight shot down to that area. And if we cannot hold down here, which I don't really expect us to, but if we can't hold here, we're right down to that 41.0175 major low. And then, like I said, who knows what's going to go on here? Are we going to come down and test it and bounce? Are we going to break through it and bounce? Or are they just going to go ahead and continue to trek lower here in the market? Keep in mind, this week we have Fed on Wednesday, and there's what, 25 to 50 basis point hike supposed to occur here. So I'm not sure what the market's going to do with that information. I don't think anyone really knows. So if the market doesn't like it, we could see a continuation down through 0175 and beyond. So that's just from this larger perspective. Breaking through Friday's low opens up the lows from last week, which is right around 38, and then we're down to that 0175. All the levels down below 0175 here, I'm going down to my 60-minute chart. All the levels down below 0175 we talked about in my pre-market from last week. I don't remember if it must have been last Monday. If not last Monday, last Thursday's pre-market, we went through all of the major levels we need to be aware of if the bears do end up coming down and getting through 0175 here. So if they do, in the most general sense, we have 86. If that breaks, it opens to 47. If that breaks, it's open to this swing high right around 4012, and then 4005. If 4000 breaks down here, it's going to be a nice quick shot all the way down to 3957 and 3940. So that's what we have below us here if the bears do take control this morning and do get a strong sell-off through all of these other levels that we have. And if the bulls gain some strength this morning and they hold the current bullish divergence we have off of this overnight low that I'm looking at right now, we need to look at what we have above. And what we're dealing with above here is 42.66 and 42.62. That whole little area right there is going to be important to get through if we're going to have any faith in the bulls this morning. So I'll go ahead and highlight this puppy right here. So it looks like we're going to be dealing with, remember there's a swing low here that I mentioned. I believe it was 69.50. Let me highlight that. Yeah, 69.75. So that should sound familiar from yesterday. So 69.70, or from Friday, 69.75 down to our eye level at 62, that 7-point range there, to me makes sense to be a trouble spot if the bulls tried to go ahead and push higher here this morning and get through that overnight high. If they can get through that, it's basically what you see on the chart here. We've got a swing here right around 42.80, another right here around 43.04, and then we're right back to our trusty 43.2450 level, which has held really unbelievably throughout all the chop. This 24.50 has held on the bottom and on the top end multiple times. So that would be there, and then we're right back to the highs of Friday. So I'm going to highlight this little area here, the high of Friday, 35.50, right up into that swing high that I keep mentioning at 41. So let me make sure this is up here. And like I said, it's just kind of tight, and it's all the same levels that we've been talking about here for 2 or 3 weeks. And it's because the price has not appreciably broke and gotten away from this range. So there's 41 into the high of Friday, 35. We've got 24.50. We've got 43.04. Remember, these are all targets to the upside. So if the market starts to get strong and the bulls start to get some strong momentum here, these would be targets to the upside for me. These were where I would want to be taking profit with portions of the positions that I'm in. So we've got those above. If the bulls somehow really get strong here and rip through all the levels I just mentioned, it's back up to the same levels that we've been talking about back to maybe a month ago, 2 months ago. All the levels that we have above that we've been watching have not been tested. So if they get up through, let's see, if we get up through the previous daily high, up through that 60 to 67 area, and we get all the way back up to 4,400, we're dealing with 98 to 4,400, and then hello again to 44.15, and that major swing low that we talked about that we held at 44.22. At that point, we're up 200 points from where we are right now. So if we get up there, we'll go ahead and reevaluate those zones above. So that's kind of what we're dealing with here this morning. We are pretty much at 50% of the last, let's say, what, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 1, 2.5, maybe 3 weeks worth of price action. We're just right smack dab in the middle here. So I feel like I've been saying this for way too long, but I need to say it again. Be really careful here in this kind of market. It's very two-sided. We have a lot of kind of aggressive pushes higher that all of a sudden turn into aggressive pushes back down to the same price that we were just at. So it just kind of goes up and down, and there's no real conviction one way or the other. So don't go nuts. Keep your size smaller. In my opinion, you should be fairly small and very calculated as to which levels you want to pay attention to in this kind of market, and do not play around in all the chop. Unless you are a really skilled scalper and you can play around in all of the noise here, just be patient and wait for the market to come to you. So that's what we have this morning. Hope you guys have a good week. We'll be back here Thursday. That'll be the day after the Fed announcement as to, how far they're going to hike the interest rates. So who knows? By that point, maybe we could have a completely new market to look at. And that's what I'm hoping for, is that we get some type of change here. But according to some analysts that I listen to who have been, supposedly trading the market for 20, 30 years, they're saying that this is going to be a sideways market here for a while. Sideways and tight. But, doesn't really matter what people think. The market's going to do what it's going to do. And who knows? By the end of the week, we could be breaking new highs. You never know, right? So have a great one, guys. We'll be back here Thursday for our public, our meeting here. And enjoy. Have a great day. Bye-bye.